Hey everybody, this is Jim at SP500chart.com. It's a little bit before 5 on 10/13/2014. Oh, my voice is giving me problems again today, so bear with me. Take a moment, please. Pause the video and read this disclaimer. Then we'll take a look. Well, more ugliness today. And, we've been looking at this consolidation pattern bounded between, these two green lines. That broke down, that broke down last Friday. And today we saw more evidence that indeed that was not a head fake, that was a legitimate break of this consolidation pattern. And we have a target of about, what is that? Call it 1869, 1868. We're almost there. But that's not the most troubling thing. Because this pattern potentially, we could reverse up and still make a nice leg up from wherever we find that reversal. What's most troubling to me is the fact that we are now underneath this long-term rising support line, even though it has not been touched in almost, in more than 2 years. So we had a touch here, a touch here, a touch here. Now you might rightly ask yourself, is that extremely profoundly critical? Well, I think it certainly is psychologically important. About the only way you could fudge your way around this not having broken is if you went off this first touch and then this touch here in late 2011 and ignore what took place in late 2012. If that's the case, we're resting on that line right now. Just want you to be aware of that. I'm kind of using the averages here, with starting there, averaging out our touch here, because that is kind of a long candle, and putting a little bit more weight on that touch in late 2012. Now, at this point, I think it might be good to take a look at things on a little bit shorter term basis and try to make some sense out of what we see going on on a 15-minute chart. You can see we had a back test almost exactly to that blue line that we were just talking about today, at which point we were about even for the day. Then the wheels came off. Now, let's do a little bit more in the way of some shorter term trend lines. The case could be made that this line right here could give us some support, because you can see numerous areas where that has been tagged before, especially right here, here, and here. And that also lines up pretty nicely with what our minimum target is. So this is a potential area where we may see some support kick in. Additionally, if we look at this on a 5-minute chart, you can see that we had this resistance line that broke out on the 8th and has so far not been violated on a return. So the back test has not yet gotten underneath this line, even though, in all honesty, this is not this has a very short history as being a technically significant line. Finally, if we take a look at the last 3 days, we can potentially see a descending channel developing that is parallel. And with that thesis in mind, we probably closed the day today very near some short-term support. And I would think we may be looking for a reversal setup when we get over this top descending resistance line. So, if we were to at some point this week trade over this line right here, then I think we would begin to look for some form of a rally. To where, it's hard to say, because we've got a number now. Every line that is above us now has been turned into some form of resistance or another. So it's going to take a pretty strong move to get back over some of these lines here. 1900 will probably present something of a challenge. Not saying it can't be done, I'm just saying it's probably going to present a challenge. So the good news is, if there is good news with today, we're very near our minimum target, which is a point at which we can begin to look for a sign of reversal back up. And another piece of good news, strangely enough, I mentioned that we may be setting in a double top here. And if that's the case, then a double top would be pointing us eventually down to about the 1790s or 1800. And that could very well be where we end up at some point. But I want to say something that may seem a bit strange. The last two major tops that developed in the S&P were head and shoulders patterns. They were not double tops. They were very well defined head and shoulders patterns. And where are they? Well, here's one right here. It did have a sort of a double head to it. And could we be headed there? Yeah, we could be. But we don't see that quite yet. Then if we zoom out even more, we see a rather sloppy, but still a head and shoulders pattern that developed back in 2000. So we've got one here and one here. And you can see that what we're looking at this particular point in time isn't quite as large as these last two. So I'm holding out a little bit of hope, if you will, that we are in a situation where the market is just needing some form of correction, and that this is not the end of the world, and that this is not the end of this very nice run. It could be, it may not be, but right now I don't see that major top pattern that we've seen in the past. I see two rallies, and I see support that's been violated. And like I said, if this plays out as a double top, then something in the 1790s would not be out of the question. But right now, I'm choosing to look at the short-term chart to see if we get at least some kind of relief rally off of this really nasty move that has brought us down almost 100 points in 3 days. So, guys, let's just hang with it. No need to panic. Markets go up, they go down, they go down, they come back up. I think we will get a rally at some point in time, and it would not surprise me if we kick that off even tomorrow. Now, will we set a new low tomorrow for the week? Well, that's not unlikely at all. But I would look to this line right here for evidence that we are at least going to reverse and come back for some form of back test that is significantly higher than where we closed today. So guys, that's your video for 1013. Ugly stuff. Hate to see it, but it is what it is. Thanks for watching, and thanks for your support. Let's hope bulls get a little bit better news later this week. Take care.